Warren Buffett is against crypto. This makes Elon Musk laugh. Welcome to Elon Musk Tech. Why do Warren Buffett and Elon Musk have such a different approach to crypto and investing? They both are billionaires and brilliant investors, but whose approach is better? Make sure to watch till the end to find out. The 91-year-old billionaire doesn't see crypto as a productive asset, adding that he wouldn't buy all the crypto globally even for $25. Warren Buffett has again criticized Bitcoin, making the case that it has no intrinsic value. Whether Bitcoin goes up or down in the next year, or 5 or 10 years, I don't know, but the one thing I'm sure of is that it doesn't produce anything. The billionaire investor, who has previously called Bitcoin a delusion and rat poison squared, added that nothing could make him buy any crypto at any price. Tesla and SpaceX chief Elon Musk mocked Buffett, responding, "Haha, he says Bitcoin many times." So what's the deal with those two? And why do they have such a different approach to Bitcoin and investing in general? Founded in 1839, Berkshire Hathaway is an American multinational conglomerate holding company with over $330 billion in assets under management. The firm's top holdings include Apple, Bank of America, American Express, and Coca-Cola. Last year, Berkshire also purchased $1 billion worth of Activision Blizzard stock, and recently increased its position in the video game giant to about 9.5% of its shares. For Buffett, assets have to have value, which means they have to deliver something to somebody. The apartments will produce rent, the farms will produce food, and there's only one currency accepted, said the Berkshire Hathaway chief. Buffett stressed that people might create all kinds of things, even a hypothetical Berkshire coin. But in the end, that's what money is, he said, displaying a $20 bill. Meanwhile, Buffett's business partner Charlie Munger is even harsher on Bitcoin. "In my life, I try to avoid things that are stupid and evil and make me look bad in comparison to somebody else, and Bitcoin does all three. Bitcoin is stupid because it's still likely to go to zero, and is evil because it undermines the Federal Reserve System. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China." Elon Musk had to mock the legendary investor after he attacked Bitcoin. After all, this happened the same week when Bitcoin Jesus returned to the public and named his top candidates for the title of the world's first cryptocurrency. Both Buffett and Munger have previously criticized Bitcoin cryptocurrencies and the recent Robin Hood-fueled stock market trading boom that they believe resembled a casino. The Bitcoin and crypto community has answered Buffett's Bitcoin criticisms with a smile, while libertarian tech investor Peter Thiel called Buffett Bitcoin's enemy number one, and Warren himself a sociopathic grandpa from Omaha. At the same time, Musk has continued to signal his support for Bitcoin challenger Dogecoin. Elon Musk and Warren Buffett might disagree about the long-term value of cryptocurrencies. Still, they seem to share the same principles for investing in the stock market. For example, here's Musk's advice regarding investing. "Since I've been asked a lot, buy stock in several companies that make products and services that you believe in. Only sell if you think their products and services are trending worse. Don't panic when the market does." The tweet remarks on the principles of value investing made famous by Buffett, currently the 6th richest person globally. With value investing, you only buy the stocks of companies with a business model that you believe in. Ideally, these companies are undervalued and have the potential to provide better earnings over a long period. Since value investors seek based on their own research into a company's intrinsic value, they don't tend to follow trends or short-term stock movements in the market. For Musk then, Twitter is another valuable investment based on this logic, as the company's board had to accept his offer to buy the company for $44 billion. He said he wants to unlock the social media website's tremendous potential in a statement announcing the deal. While tweeting "Don't panic when the market does," Musk also resembled Warren Buffett's most famous quotes about not following the crowd, even if the market is down. "Be greedy when others are fearful, and fearful when others are greedy." Musk also declared that it is generally better to own physical things, like a home or stock in companies you think make good products, in times of high inflation, rather than keeping the cash. He added that he still owns Bitcoin, Ethereum and Doge and won't sell it. While Musk and Buffett might disagree on cryptocurrency's long-term prospects, Musk has also cautioned people not to bet the farm on crypto in a previous tweet, adding that true value is building products and providing services to your fellow human beings, not money in any form. In recent weeks, Warren Buffett and Elon Musk both made multi-billion-dollar bids for companies. Let's take a look at their recent bids and compare them. In early March, Buffett made his almost $12 billion bid for Allegheny over dinner with the insurer's CEO. The famed investor highlighted the offer wasn't subject to financing, geopolitical risks, or due diligence. 5 days later, the Berkshire chief met the Allegheny CEO and chairman and refused to budge on his price and other terms. Allegheny's board unanimously voted in favor of the merger on March 20, less than 14 days after Buffett offered. Musk took the road to transform Twitter by spending over $2.6 billion to build a 9.2% stake in the social media platform between January 31st and April 1st this year. Musk potentially saved about $150 million by disclosing he owned more than 5% of the company's stock in April 4th, 11 days after the Securities and Exchange Commission's deadline of March 24th. He initially filed as a passive shareholder by later refiling as an active one. Twitter offered Musk a seat on its board of directors. The serial entrepreneur initially accepted it, but then changed his mind and rejected it. Days later, Musk disclosed in an SEC filing that he had made an offer of $54.20 a share for Twitter to its chairman and indicated he would sell his Twitter stock if it wasn't accepted. Twitter's board evaluated the bid and tried to adopt a poison pill to thwart a hostile takeover. While Musk answered by criticizing the company's board, communicating via emoji, and suggesting he might make a tender offer for other stockholders' shares. Both Buffett and Musk presented their bids as their best and final offers. They also put their personal stamps on them. While Buffett showed his disdain for bankers by refusing to pay Goldman Sachs' fee, Musk has offered a price of £54.20, which is a nod to April 20th, or Weed Day. Buffett tried not to rock the boat. His style is fast, friendly, and simple. On the other side, Musk loves to be disruptive and confrontational. His style is chaotic, cryptic, and hostile. Judging by their style, there's no wonder why one loves crypto and the other doesn't. We leave it to you to decide whose style is better. Maybe they both succeed in their leagues. Leave your opinion in the comment section. Don't forget to like, share, and subscribe so you don't miss an upload. And you can enjoy the excellent content we send your way.